Joining me now to discuss this and more is Matete Tulare from RMB. Thanks so much for your time. Appreciate it. So there's so much to talk about. First, the rand coming under pressure. Tell us exactly what's happening.
So look, it's been an interesting week and not so much good news, unfortunately. I think we started the week with news emanating from the US that Donald Trump is looking at implementing further tariffs on China. This is over and above the 250 billion worth of tariffs that he's put on Chinese products. So it's not good news. But also we had manufacturing data out of China also disappointing. And then you bring it back home locally. We had the unemployment numbers as well as the trade balance numbers this afternoon not looking good. And unfortunately, that just resulted in just a weak rand from Mondays. And I think today we touched something around 14.85, if I'm not wrong.
Yeah, that's not too good for us. And of course, all of this has consequences on the price of fuel in South Africa. Of course, oil prices also impact.
Yeah, look, I mean, it's quite interesting. I mean, there's been also a report that oil could go up to $100 per barrel. We do know that the sanctions, the US sanctions on Iran are kicking in on the 4th of November. So that is very interesting in terms of a supply and demand perspective. So I think at the moment oil is trading around $75 a barrel. But with the new sanctions coming in, that could unfortunately filter through into a higher oil price. And as you say, it will, with the weaker rand, unfortunately hurt the consumer.
Yeah. So let's talk through the risk appetite for emerging market currencies given the current situation in Turkey.
Yeah, look, I think Turkey's been one of the major issues that we've had, unfortunately. If you look at Turkey, Brazil, Russia, South Africa, we've been the four emerging markets that have been hit. If you just look at the rand on a month-to-date basis, we've lost about 4%. In the past 6 months, the rand has lost about 20%. So this just shows you that, Turkey and ourselves, unfortunately, in the same boat in terms of, weak fundamentals, low growth, high inflation. So we're not only alone in this emerging market boat.
And then you mentioned BRICS countries as well, and you think about China and the economic prospects there.
Yeah.
What's the impact of that on emerging markets?
So unfortunately, what you are seeing at the moment is a slowdown in Chinese numbers. We did see it with the manufacturing numbers, and this is also partly attributed to the trade war, trade tension that the whole market has been talking about. There's been a report that if we do see Donald Trump levy the full 500 billion worth of Chinese products being levied in terms of tariffs, we could see forecasted numbers of 6.6 in Chinese GDP revised downwards to around 5%. So that could unfortunately impact us because China is actually our biggest trading partner. But that said, we do hope that, at the G20 summit later this month, Donald Trump and President Xi Jinping are scheduled to meet. They did say that they will talk about this whole trade war and trade tension, and hopefully there will be some sort of consensus and agreement about all of this.
Yeah, and now to make matters worse, it seems like we're going to be paying more for our car and house repayments. What's the Reserve Bank doing to us?
Yeah, look, I mean, as I said last week when I was here, that unfortunately I think they should have increased interest rates at the previous meeting, but I think it's a foregone conclusion now that they will hike by 25 basis points come November the 22nd. That's in about 3 weeks' time. But prior to that, you've also got the US Federal Reserve also hiking rates around the 8th of November, next week, Thursday.
Yeah, it's not good news. It's not good news. It's not good news. I know they're doing it to balance things, but I mean, for us, it's not good news when you have to pay, your bond and your car repayments. Exactly. We're expecting some economic data out on Thursday. Take us through that. What can we expect?
Yeah, so look, I think Thursday we've got the Bank of England, the policy rate decision. The market's expecting that to be kept on hold. That's not, I think the market has really kind of looked through that. I think the big thing is the US jobs numbers on Friday. We've got non-farm payrolls on Friday. The number that they are expecting is 190,000 jobs to be created. The unemployment rate as well at 3.7%. That's a 48-year low that we've seen US numbers at. But if we do see a stronger set of numbers out of the US, unfortunately, I do think we'll see a stronger dollar and a weaker rand. And unfortunately, this will force the Fed to actually hike rates next week. Yeah. So sorry to be the bearer of bad news.
We're giggling about it because it's so awkward and it's going to hurt us all. Thanks so much for your time and your insight. We do appreciate it. That was Matete Tulare from RMB.